So if you're sat watching the market and you're scared of the crash, my advice to you is simply to do this. Put your feet up, grab your tea, and wait for it to all blow over. So there's been a lot of talk over the past couple of weeks about how we are suffering some huge, massive crash at the moment. And there's lots of speculation about what's causing this crash and how long it's going to go on for and all the different kind of elements of what's going to make it better. And I'm actually kind of wondering if a lot of what we're seeing and a lot of what people think and a lot of what people are saying is actually completely rubbish. And the reason that I'm thinking that is I'm currently reading a book that I'm going to share with you guys in a few days' time with a book review for it once I've finished reading it. And basically a big part of this book is the randomness of the markets and how people can often get like a little bit of a confirmation bias, or how they think they kind of like have explained something when actually it had nothing to do with that particular reason. And the reason that I'm thinking that is when you look at the graphs, for example, that I've got up here, we've got the SMT, which is obviously a selection of tech and growth stocks predominantly in the US. We've got the Nasdaq, we've got the S&P 500, we've got the UK FTSE, and we've got the S&P 500 again. For some reason I've duplicated that. Basically, if you kind of look over the past couple of days, you can see quite a big drop. Or the past few weeks, you can see quite a big drop, which is obviously very, very kind of concerning in many ways. But when you kind of zoom out and you kind of look at the kind of prospect, the SMT is obviously, that's quite a significant drop, more even than we dropped in April, which is phenomenal, really. SMT seems to have really, really suffered in this. But with the Nasdaq, for example, when you kind of zoom out, and I mean, I'm not even going to compare it to this because that's ridiculous. But when you compare it to, for example, September, and you look that September, we dropped about 750 points, maybe a bit more, from peak to trough. Yet, when you look at it now, from peak to trough, we're not even at the 750 yet. Now, I don't think it's going to keep on going, but my point being is, when this happened, lots of people were making loads of random speculation about why it happened, what caused it. Nobody really seemed to have a good answer then. Yet now, apparently, it's explained by the bond market. Now, don't get me wrong, I'm not saying that the bond market has nothing to do with this, because there is a very good chance that part of it may have been triggered by the bond market, and it may have been kind of exacerbated by the bond market. But what I actually think is this is actually quite simply just there's more sellers than buyers. There's no kind of like real story behind it, because when you actually go through and you actually look at the different charts, for example, the Nasdaq, I mean, look at it. It's not actually that much far below what it has been the past couple of months. So it's not hardly really like some massive drop. I think we've kind of had a bit of a sell-off that has taken us back to the past couple of months, which, to be completely fair, when you look at the chart, any time, at any point in history, there is always times where you go up a bit and you go down a bit. That's just the way the market works. And then you look at things like the S&P 500, and again, obviously you've got that growth. You look at the UK, the FTSE, and we're fairly flat. I mean, we've had higher times, we've had lower times. It's just the same. When you look at random companies like, for example, a UK company, Kingfisher, or a European company, Kingfisher, and again, we're fairly flat. You look at a company like GM, and we're hardly at some kind of all-time low or massive drop. So we are very much talking about the stocks that have been hurt in this are literally just a selection of very, very popular retail investor stocks. Now, that doesn't say that the market is crashing. That doesn't kind of imply any kind of big thing. Now, at the end of the day, if, for example, if it was due to bond yields and it was everyone's taking their money out of the market, it would have affected a lot of other stocks within the market. It would have done so much more that it hasn't done. Now, when you then kind of look out through the different elements, you can see that where we've kind of, with the tech stocks, other than the SMT, because I've got absolutely no idea what is going on with that. I mean, look at that, that's back to like November levels there. But when you look at stocks, obviously, for example, some of my favorites here, let me just bring them up. Again, much like the S&P 500 and the Nasdaq, we're kind of talking about reaching back to the lows, the kind of levels as such that we had November, December, and January. You know, we've obviously climbed a bit in February, and this obviously Peloton, we climbed a bit in December, and then we've just fallen back to those kind of levels, which to me, it's kind of saying that we've had our sell-off, and all the people that were going to kind of take their money out and take their profits, they probably have done it now. Because at the end of the day, as far as I'm concerned, only really a foolish investor is taking their money out now. So who's going to be selling? I guess that's really what you need to be asking yourself. Right now, who is going to be selling? Because I can absolutely understand people selling up here and up here. And I think a large part of what I'm seeing is that people, we probably had like a little bit of an exchange of cash, of people taking their profits, etc., out of the kind of tech stocks and the growth stocks and moving it into safer places like bonds, etc. And that kind of caused a little bit of a panic because we had a load of money coming out, and we had a reason as such of why that money was coming out, which then made people panic and everyone started pulling their money out. And when people start pulling all their money out, that then means that all the leveraged positions start hitting stop losses or getting margin calls and closing, which then drives the price down even further. So you almost get a little bit of a domino effect. But I feel like from what I'm looking at the charts, from what I'm looking at in the news stories, from all the random YouTubers that are giving random advice, and that includes me, do your own research, don't listen to me. Who knows if I even know what I'm talking about. I could be completely wrong about everything I'm saying right now. At the end of the day, everything with the market is absolute speculation. And this is my speculation on what I think. And as far as I'm concerned, I think the dominoes have ended. There's no more dominoes to fall. Anyone that was going to take their money out, anyone that was going to close off, has done it. And I think actually the past few days have probably just been a complete absence of buyers, which has then meant that the price has fallen down even more as people are continuing to panic sell and as those kind of margin calls and stop losses are hitting. So looking at prices, I'm not seeing the drop that a lot of other people are kind of predicting. I'm seeing a lot of value in the current positions because, like I say, a lot of these positions now, especially the growth companies, they're not really a value play as such because there's still a lot of speculation within those prices. But for me, they are absolute bargain prices right now. I mean, for example, looking at Peloton. Now, we had quite a big time here where it is well above 150. right? And in my opinion, there is no doubt that it's easily going to go back to this 150 price, and it's currently about 100. So we're talking about a 50% gain on this stock, which, to be honest, I can see happening fairly reasonably fast. So there's that. Fiverr again. I mean, we've had a drop here. It kept pushing up higher. It's going to keep pushing up higher. It might take it a few weeks, couple of months maybe, to get back to 325, but it definitely will make it. And all of this just kind of reminds me of the quote from Warren Buffett, which is that the stock market is a wonderfully efficient mechanism for transferring wealth from the impatient to the patient. And that's what we have to do here. We've just got to hold, wait for it. And as far as I'm concerned, if you've got more cash, buy now. Because right now, from what I can see, is an absolute bonus time to buy in. I've just added an extra, obviously this is my demo account, sorry, wrong chart. I've just added an extra 10% of my funds, 5% on Games Workshop, 5% on Ocado. And as far as I'm concerned, they were both at absolute bargain prices right now. And that goes pretty much for any stock. I'd probably buy more Fiverr and Peloton as well if I could right now. But because of my risk score on eToro, that's probably not a viable option for me. So that's where I'm at the moment. Let me know what you guys think. Obviously, things that I haven't spoken about, we've got the stimulus package coming soon, which is one of the reasons that people think that the market's going to recover or stay red for a few more weeks and then recover. Or we've got the Fed with Chair Powell is going to hopefully give us some more good news in a few weeks' time. Again, could make some difference to the stock market, or it may absolutely make no difference in the kind of longer term prospect of what's actually happening at the moment. At the end of the day, news can quite simply kind of be a little bit of a catalyst to start a movement, and then actually what ends up being more a kind of overreaction and the way that people kind of panic and the overall sentiment of the market rather than necessarily the kind of hard facts of what's happening. Yeah, so that's my thoughts. Do your own research. Thanks for watching, and I'll see you in the next video.